All right, welcome to the weekly prep video for the week of December 22nd to the 26th. In today's video, I'll be going over the action from the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ, just a phenomenal back-to-back day, Thursday and Friday, when things looked extremely, extremely ugly. On Wednesday, with the major distribution bar off the 50-day moving average in week close. We gapped up Thursday on like partial CPI data, pushed through again on Friday with a gap up, opened on the low, recaptured the 5, the 10, the 20, and the 50-day moving average, and closed well in the daily range. Up 1.3% for the day on Friday and up 0.6% for the week. And as you can see, the NASDAQ actually led all the other themes or all the other indexes, which is a good sign. Usually when the NASDAQ leads the S&P 500, it's a better market to trade, at least for growth stocks. S&P 500 up 0.6% on Friday, back through the 5, the 10, the 20-day moving average. Nice bounce at the 50-day on Thursday. Came from a new closing high on December 11th, pulled back to the 50-day, and hopefully this is a higher low. We can rally up and then start to tighten up right at all-time highs next week. IWO, the growth stocks of the Russell 2000, another name that had new closing highs back on December 11th. Quick sell off to the 50-day moving average, followed by a gap up, weak close, gap up, strong close on Friday, back through the key moving averages, only down 1% last week. ARKK still a little bit weak, flat for the this past week, with again like two more gap ups Thursday and Friday, recaptured that 5, the 10, the 20-day moving average, still under the 50-day, and this is more of a reflection of the like tradition or more so the growth stocks in the market where you're still under the 50-day. A lot of those names are under the 50-day, but the best stocks in the market are near their 52-week highs. The best stocks are back above their key moving averages, just like the NASDAQ and the S&P 500 are. So even though the growth stocks in ARKK are still relatively weak, we want to be focusing on the strongest stocks, obviously. Then switching over, taking a look at Bitcoin. I'm filming this on Friday right after the close because I'll be traveling. But Bitcoin just continues to kind of barcode here. It seems like sentiment is getting worse and worse and worse with Bitcoin without price actually taking out that flush from November 21st. So hopefully this is like a higher low where sentiment is really sour. And then we could push out through here, maybe test the 50-day moving average. Right now sitting at 88K and refusing to go down, refusing to go up. Some relative weakness compared to the NASDAQ still. But again, hopefully this is very sour sentiment without price actually being able to go down. Same with Ethereum, hovering right at that 3K level, right at the 10-day EMA after the rejection off the 50 the prior week, and still potentially like another higher low, like in the bigger picture, but still some weakness here. Getting to the liquid leaders, we switched out Rocket Lab. Well, we added Rocket Lab and kicked out. I'm blanking on the one that I just kicked out, but we'll sort this by price percent change this week so we could see the strongest stocks. And no surprise, Rocket Lab is the strongest stock out of the list. They also had news come out after the market closes. After the market closed, they're up another 3%. Some deal that I need to look into a little bit more. But 17% on Friday, a 14.7% for the week, a higher low right on that 50-day moving average. And then as the market pressure relieved, very powerful Thursday, up 11%. Very powerful Friday, up 17.7%. And new closing high for Rocket Lab. Very, very impressive. LITE, this chart, I'm not going to lie, it kind of hurts to look at. Because I always say the first test of the 20-day moving average after making new highs is a good risk reward spot. And I saw this gap zone, I saw the market deteriorating, and I really tried to stay patient for an undercut of the gap to get involved. And it's too strong for that. Undercuts the 20-day, but then gaps up, sells off on Wednesday a little bit. Strong gap up on Thursday with the rest of the market, and then really got going on Friday, up 10.2%, ending the week up 14.5% in just under a all-time closing high. MU reported earnings on Thursday, gapped up and closed up 10.2%, but still under a couple of resistance gaps. Friday, we followed through to the upside, up another 7% and a new all-time closing high. Not bearish price action there. Palantir up 4.2% on Friday. Really, really nice back-to-back days, Thursday and Friday. And I love the way, well, unfortunately, I got shaken out on Wednesday, bought this back on Friday. Um, but a name that was showing relative strength finally had like one bad down day. And immediately when the pressure lifts off the market, we gap back through the 50 and the 20-day, close well, gap up again, and go on Friday, up 5.3% for the week. PL in that same group as Rocket Lab, another name that was holding up well over its HBC after its earnings. Then unfortunately just came under pressure with the market coming under pressure on Wednesday. Gap up on Thursday, closed up 6.2%. Gap up, open on the low, close in the upper half of the daily range on Friday, up another 9.7%. And a new closing high for PL. Very strong. Tesla still like right at highs, a little bit of weakness, relative weakness today compared to the rest of the market. But still, whenever you chop over the 5-day moving average on lower volume than the previous day, I never look at that as a negative. I think this is just consolidating right below all-time highs. And when we do take out that level, it'll probably be pretty powerful. Eli Lilly up 4.2% for the week. Kind of a rare pattern where it's called a wick play, where you gap up and then all of the trading on Friday or on any day is done within the upper wick of the previous day. That's an Oliver Kell special. He buys through the break of the either the current day or the previous day and tends to lead to higher moves. Up 1.3% on Friday, up 4.2% for the week. And a lot of healthcare names actually started to come back on Friday. COHR up 5.3%, or sorry, 5.7% on Friday, 4.2% on the week. Pulled back to the 20-day, just like LITE, bounced there, and then pushed through that level on Friday. Really nice action. And then WDC maybe needs to be replaced with CIEN. There's so many like very clean memory stocks, MU, WDC, STX, um, CIEN, and SNDK. That theme in itself is still very strong. I would say memory, the rockets, and then retail clothing are kind of the strongest themes and metals in the market right now. Speaking of themes, let's go over each of the industry ETFs. We'll sort this by price percent change for the week so we can highlight the strongest and go to the weakest. So XME, because this is the weekend prep video, I'll go through every single one and spend just a little bit more time on the ones that I find more valuable. XME, metal and mining, up 3%. And we know gold miners, silver miners, very, very strong. This whole theme continues to build out higher lows and really respond well with the market. We are in this overhead resistance gap, so we could probably see some chop in this area. Hopefully, we can close above that and then continue to trend up, finishing the week up 3%. Gold miners GDX up 2.5%, a new all-time closing high. Not bearish price action there. It does seem like gold and silver, at least silver, maybe a little extended in the short term, but for now, very, very strong price action. Next up, we have TAN, the solar ETF, up 2.3% for the week, and another stock or another ETF that had that same pattern in the wick or a wick play setup where you gap up, trade within the previous day's upper wick, and then through that level is buyable, stop at the previous day's low. ITA, really, really powerful strength the last 2 days here, up 2.7% on Friday, up 2.2% for the week. Higher low off that 50-day moving average rejection, then just really strong action. We did close within this resistance gap here, so maybe some chop, maybe a pullback here would make perfect sense. But love the bar on Friday. ARKQ, this is a new ETF to the list. I kicked out the robotics ETF and just added ARKQ, which is robotics and technology. A couple more names that I'm familiar with in this ETF. And so for now, tracking that. Ugly close on Wednesday, like everything in the market. Gap up, pushed through the 50-day moving average, and then closed well, up 3.6% on Friday and up 2% for the week. Back through all the key moving averages. IYZ Telecommunications ETF, really nice snapback off that 50-day, and then closed just a percent or two away from all-time highs. XLY, Consumer Discretionary ETF. I really thought that this was a group that was probably dead after November 20th SPAR, but instead of following through to the downside after that major distribution, we followed it with a unfilled gap up, another unfilled gap up, reclaimed the 10 and the 20-day moving average. And at that point, you can't be negative. Like when you see very, very negative price action like that and sentiment sours, you have to be prepared for an unfilled gap up in the opposite direction, reigniting the move higher. We saw that with the Nasdaq and the S&P 500 earlier this week. We saw that with XLY or XLV, the healthcare ETF, before that started its new uptrend. So that combination and then persistent price action has to keep you bullish. That theme, new all-time highs on Thursday, slight pullback on lower volume into the 10-day or not even into the 5-day moving average on Friday. Semiconductor ETF, SMH, another great example of this where we close under the 50-day moving average. Sentiment really sours, myself included, right? We can go check the tapes. I was very bearish on semiconductors, but an unfilled gap up will change my sentiment on that because when you get an unfilled gap up, people think, okay, we're gapping up, we're just going to sell it right back down. But if you gap up and don't sell right back down, you need to at least take note of that. It doesn't have to be an entry tactic or anything like that, but at least take note of that, especially when you follow through the next day through all the key moving averages and close well. Up 0.6% for the week, 2.65 on Friday. XLV, the healthcare ETF, here's the example of the ugly close under the 50-day moving average, followed by a gap up, and then one big bar to get us back into that range. And at that point, healthcare was an emerging theme. No one really talks about healthcare as an emerging theme until like November 12th. And then it had a couple tight days, one more run, and then the pullback. So really keep an eye on when a lagging group like has kind of a flush of ugly price action, followed by a gap up that follows through to the upside. XLV up 0.7% on Friday, up 0.6% for the week. Nice, just like consolidation over the key moving averages. PEJ, another one, very ugly close, gap up, ugly close, gap up, right into highs, some resistance gaps there, but a big gap up on Friday with Carnival Cruise Lines reporting earnings, monster move from Carnival. Vikings, Viking Cruises made new all-time highs. And it seems like people are spending money on leisure and entertainment, like that group said. So what looked like it was going to be done for may now be an emerging theme in the market. XLB, basic materials, still holding over all the key moving averages. Not really something that I trade very often, but the more ETFs in an uptrend over their 20-day EMA, the better. FDN up 1% on Friday, up 0.3% for the week. Potential high or low overall. Still a lot of overhead supply, not really focused on those names. Biotech XBI, awesome week close, gap up, reignites that uptrend, closes up 2.9% on Friday, and then basically flat for the week. Very, very good combination there. UFO, this is the ASTS, the PLs, the Rocket Labs. Gap up Thursday, gap up Friday, nice push here. And we could probably see some tightening before we follow through, but really nice higher low and then some power. NLR, nuclear and uranium themes, up 3.7% on Friday, basically ending the week flat right at the 20-day moving average. We'll see if that can continue higher. XLF, I think this is probably the most important chart in the market outside of Tesla, because we've seen so many stocks make new highs and then immediately roll over. Hopefully that trend is ending and we're building the higher low on the NASDAQ. We can get a rally from there. But I was very worried that financials would do that same thing because it was really the only group that was holding up at new highs over the last week or so, while the rest of the market melted down until at least Wednesday. And we started pulling back. We were actually even a little weak on Thursday, but on Friday. We pushed back through the 5 day, closed well. Now this looks like a little bull flag. Hopefully we can continue forward. We definitely don't want to like lose Thursday's low on a closing basis. I always said it's hard to take the entire market down with financials acting this well. So until they act poorly, I'm going to be more bullish. IGV, the software ETF, higher low bounce at the 200-day moving average. Nice double gap up back through the 5, 10, 20-day. Still a lot of overhead supply, not the greatest theme. XRT, another name that was left for dead under the 200-day moving average on November 20th. Then we get a gap up, strong move, gap up, strong move. And retail, especially retail clothing stocks, just extremely, extremely strong. Basically pulled back this week to the 10-day moving average, but nice hammer candle on Friday to end the week down 0.4%. XLP, consumer staples, not really important part of my process, but closed back under the 10-day moving average, down 0.8% for the week. Cybersecurity, a higher low on the 200-day moving average and a couple gap ups. I don't know if this is a misprint or not. I guess time will tell. Um, Still under the 10 and the 20-day moving average. Really not the theme that I'm focused on. The individual names in that group, not very strong, at least yet. KWeb, Chinese internet, continues to be lacking. BIDU, pretty interesting. There is one Chinese name on the long watch list that I'll cover. But overall, not like super interested in the theme of China right now. IYT, the transportation ETF, impressive that it's holding up this well with Uber, which is like 20% of this ETF, just trading like crap. Made new highs last week, pulled back to the 20-day support gap, bounced there on Friday, down 1.8% this week. ARKG, the genomics ETF, down 1.9%, just kind of hovering under the 20-day and the 50-day. Hopefully, with other healthcare names starting to pop back up, we can push through that $30 level, and this could be a higher low overall. Blockchain and data center related names, nice day on Friday, up 3.4%, but still down 2.9% for the week, still closing under the 10-day EMA. Has a lot of work to do. XLE, the energy ETF, kind of bounced back when everyone thought that we were going to war with Venezuela. Then Trump didn't announce that yet. So now we're just kind of hovering here. This has just been chopping, building a base for, what is it, 3.5 years now? Maybe we can get back going over the 50-day moving average, but kind of a failed move in my eyes until we get back through that level. ITB, the home builder ETF, continues to act just extremely weak. Closed under the 200-day moving average today, lower low into the support gap, sure, but down 4.2% on a week that, I mean, a lot of themes were actually holding up relatively well. So not perfect action there. And then the cannabis ETF, I think this might be the last time that I cover this, but cannabis got rescheduled or marijuana got rescheduled on Thursday. It was a big sell the news event. MSOS down 27%. Today, Friday, we gapped up, tried to push a little bit, and then closed basically flat on the day, up 0.9%. Not really sure what good news can come out that can push this up. We'll see, but probably won't be covering this going forward. Then before we get into the long and the short setups, we do have NAAIM, Active Investors Exposure Index to go over. So this is not a sentiment survey. This is actual positioning of active investors. When it gets over 95%, breakouts tend to not work as well. If everyone is already long, who else is left to buy? It can go over 100%. Obviously, it's at 100.7, excuse me, right now. I think the highest I've seen it at is like 114. So it can go higher, but we are staying elevated for a long time. And this could be some window dressing going into the end of the year. These active investors have to show that they're in the right names. Otherwise, their investors or their clients are probably going to ask them why, why they give them all their money to manage. And I've seen it a couple times where we go from 100, then January 5th, we drop down to 70%. So maybe it's something like that. But right now, positioning is still heavy on the long side. COT data, commitment of traders, is still catching up. Right now, it's at like December 8th data, so it's still lagging by about 2 weeks. Hopefully, we can get that all caught up next week. All right, to the long setups. First one is Tesla. I think this could be buyable. I wouldn't want to buy it on strength, but it is like a nice double bottom base. It's at all-time highs. This is a multi-year base. So if any breakout is going to work, even with elevated exposure levels, it'll probably be Tesla. Through today's high, sure, could be viable. I would still rather see like another pullback into the gap zone, into the 10-day EMA, kind of like a breakout retest. If the market can pull back just one more time and really tighten up, that would be ideal place to really size up and then keep your stop like under the 20-day, which will probably catch up to the support gap here. SNDK in that memory group, really nice flag here, built into the 50-day moving average, bounced, nice move on Friday, up 8%. Just looking for another higher low pullback into that 219 level. You got the 5, the 10, the 20-day moving average, and the gap zone. Little undercut and reclaim of that would be viable versus the 50-day moving average right around 204. APP, a software name. So the theme is relatively weak. There's a couple software names that are still acting well. APP is one of them. Nice double bottom base, put in a little handle at the 20-day moving average. Almost closed at a new all-time high, which is impressive. But because we have a resistance gap there, I'm not trying to buy into strength, especially with positioning over 100% invested. Wait for a pullback into the 5-day, into the gap zone at 693, 694. Reddit, really like how this is trading overall. Like this is like some sloppy chop into a resistance gap. So again, we're not going to be buying right into an area that we know that there are sellers. That skews the risk reward against our favor. We want risk reward in our favor. So instead of buying into strength, let this pull back into the 10-day into this first gap zone, 2270, or sorry, um, 227.50, that area. Then we can manage risk against the 20-day moving average and the secondary gap zone. Next up, we have First Solar, and I'll just go through all three solar stocks that I have on the list. First Solar, first time touching the 50-day moving average, supported multiple times here. After over 100% move off the lows, what was it, 118 to 280. First test of the 50-day, setting up well. Really nice flag here. Um, this one, like it could be viable on strength. Again, I don't like to buy on strength when the market is this overly bought. So a little pullback into the 10-day moving average, this 260 area. That's the spot that I would look to get involved. Let it kind of shake out, then recapture a daily VWAP, get in on strength after the shakeout, and then just keep your stop under the 50-day moving average. Let's go CSIQ next. Canada Solar or Canadian Solar. We talked about how rare the the wick play setup is. Here's a wick play. Here's a double wick play. I don't know if I've ever seen that before. I wonder if Oliver has, but very nice price action here. Yes, we are closing weaker in the daily range both of these days, and we're gapping up. But nice consolidation, overall key moving averages. This is a name that made a move from 14 up to 34, has digested that, tested the 50-day moving average, bounced there, and is now consolidating. If this pulls back and we like can pull back into the 10-day right around like 230-ish area, I'll look there for a VWAP recapture. Then I can manage my risk against the 50-day and be a little bit more aggressive with sizing. But this is one through the highs or an opening range break a little bit below the highs through $25 would be viable. Then you have to use your stop at like yesterday's low or today's low. And then DQ, this is the Chinese solar name. Very similar, nice flag here. Bounced off the 50-day, then bounced off the 20 twice. Nice tight price action. This one, fine buying through strength because gap zones don't really exist when equities are traded on a different exchange. So just looking for a break through today's high, stop under the 20-day EMA and Thursday's low. So a couple different solar stocks to keep an eye on. We covered TAN showing some strength as well. Next up, we have RKT, Rocket Company. This might be getting dragged down a little bit with home builders. Not quite sure if that's like super correlated, but nice bounce this past week back through the key moving averages. Now just waiting for a higher low retest of the 20-day moving average and the gap at 1865 as the potential entry entry, and then stop would be 2 or 3% below. Talked about leisure and entertainment being a theme that's a potential like emerging theme. LVS, Las Vegas Sands, extremely tight price action after a shakeout under the 20-day EMA on December 12th. Like this, just through the high, stop under the 20-day EMA. CRS, a metal and mining name, had a nice shakeout to the high volume close, the HVC from earnings, where it was up 22%. Bounced at the 50-day moving average as well. Now we're tightening up above that 20-day and the support gap. Still don't really want to buy this on strength. Little shakeout under the 20-day, under the support gap at 316.50 would be the buy spot for me. And then depending on when that happens in the week, maybe the 50-day catches up. Kind of doubt it. We'll just likely leave a 2% stop. WVE, this is very much just a performance booster trade. So if you're not looking for that, if you're not like already heavily invested in the market, not the stock to enter the market with. Definitely just a performance booster. Treat it as a day trade, and then if it works well, you can hold a little bit overnight. But monster move on December 8th, up 147%. Followed through day two, up another 15%. And then extremely light volume as we pulled back into the 5-day. We had a little shakeout on Thursday, then some strength on Friday. Volume is getting like just non-existent. So from that contraction is going to come expansion in one direction or the other. If you say, hey, I want to short this, it's up way too much, short it, stay with the side of the VWAP, make sure you manage your risk, and nothing wrong with that. And if you want to go long, I think just through the two daily highs right around 1660, play it on strength, get your stop to break even as quickly as possible, treat it as a performance booster. EH, a lot of the healthcare names started this like 2-week pullback. Then we got Eli Lilly going. I bought NTRA going this past Friday. GH, I tried and got stopped out on December 16th. Now we're starting to kind of build out a little pivot here. The 10-day, the 20-day EMA, and $100 right around the same price. Punch through that level would be viable with the stop at the lows here, 95.80. So just about 4% risk. Lemonade Insurance, this has been a very choppy trade. So because the trade's choppy, we don't want to buy it on strength. We want to buy it on a shakeout. Shakeout of the 10-day EMA, the support gap, and that high volume close from earnings right around 78.80 would be the buy spot. Stop under the 20-day EMA. Kohl's, we've talked about how the retail, like clothing companies have been on fire lately. Kohl's kind of kicked that off, up 42% on earnings, then 7.5% day two. Eventually pulled back to the high volume close, and we've held that level every day except for one day. Um, and then continues to flag out here, volume starting to dry up, 20-day EMA catching up. So really nice consolidation here. I am in this trade from December 8th. For full disclosure, just gone sideways on me. Hasn't hit my stop, so just hanging in there. Um, Really nice close on Friday, putting it back in the money. Through Friday's high, I think would be buyable as we break out of this like little downtrend line. Or one more pullback into the high volume close, the support gap, right around 22.40 would be buyable. Then you could keep your stop under the lows of the pullback. CHYM, really nice consolidation over the last 3 days. Pivot right at $26. Nice tight volume, lower volume there. So you're going to get expansion again in one direction or the other. If you want to say this is relatively weak on Friday, I think it's fine. I mean, it was up 2.5% on Thursday, up 1.7% on Friday. Nice move off the low here from 1750 up to 2750. Just looking through that high as the buy spot, stop at today's low. And we covered CSIQ and DQ, so we can go to the short setups. Costco still on the short watch list. Still looks like a stage 4 downtrend in progress to me. Don't want to chase it down short because we do have a couple of these lower wicks this past week. So let that rally back up at least to the 10-day. But I feel more comfortable into the 20-day moving average next week, 88 or sorry, $883, and then look for the loss of the daily VWAP. So then you could short it with a stop. Like, I mean, you could almost get your stop at $900 at that point. But You've got your big stage two uptrend, big stage three top, and like SFM, like MMYT. These stocks, when they do break into stage four downtrends, they can make some pretty linear moves relatively quickly. Spotify, speaking of stage four downtrends, we had that rejection off the 200-day, wave down, rallied back up over the 20-day. This was the perfect day to short it. Little uppercut and fail of the VWAP. We got a nice flush lower, and now we're bouncing again. Just looking for a rally back into this $600 level, just over the gap zone. Let it uppercut and fail there. Then you can keep your stop above the previous high and the 50-day moving average. SYM, double top short sale on earnings on massive volume here, then got downgraded. That should be gap there. Um, Don't know why those got erased. My bad. But multiple gap downs, little bear flag that broke to the downside on Friday, and then still relatively weak on Thursday and Friday. Like, yes, we rallied, but we closed at the low of the day. We rallied, but we closed at the low of the day. This is one where if we gap up again on Monday and then lose the daily VWAP, that would be shortable versus today's high. QBT has been the weakest of the quantum names. Nice day on Friday. What was this up? 5.2%. Still on lower volume. Let it rally back up into the 20-day, into kind of this overhead area where we built a little shelf, broke out of it last time, and then failed at that level, right at $12. Let it come up to $12, then lose the daily VWAP as another lower high to short. Can't really keep your stop too wide. I would just use whatever the high of the day is after that rally. And last up, we have ARKQ, another very weak name under the 200-day moving average, rallied back up, kind of created this little bear flag. And I thought this was like an awesome short setup through that level, went from 28 down to 22. Now you don't want to short in the hole. Let it rally back up, at least to the 20-day, right around 27.50. Then start to look for evidence that it's starting to weaken again. Then you can get entered with the stop right at that 200-day moving average. So that's going to be the weekly prep video for the week of December 22nd to the 26th. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you have a great weekend, and I'll see you guys on Monday's video. Take care.